So I would like today, as it is a keynote speech, to concentrate a little bit on three elements, and they are all connected to a lot of regulation. So for European exchanges, there is a lot going on when it comes to regulation, and here you see some of these wonderful abbreviations which we tend to use. But my promise today is that I'm not going into all the technical details. I would like to try to look a little bit differently upon it. So there will be, I think, three parts of what you will hear me talk about. I will talk a lot about the role of exchanges. Perhaps we as exchanges could criticize ourselves for being catched into all the details instead of being a little bit more principled, look at what is our role. So I would like to say more about that today. It's also obviously for me, being in this industry since 1998, following a development when it comes to consolidation and technology, that we still, as an exchange, as a market operator, have a clear responsibility for well-functioning markets. It's very good that we have regulators to keep control with us, but fundamentally, it is our responsibility. And it's good that we have somebody to supervise us, so we're sure we do it correctly. So for me, I don't see any problem being a for-profit entity and still have the role of creating well-functioning markets. Because as a market operator, there is a very good overlap between that you are a very good regulator and your bottom line. Because the more well-functioning the market are, the more volume activity you will see. And finally, it is impossible for an exchange, if I want to be principled, not to talk about integrity. Trust is extremely important. I mean, what are we doing in equity markets? We are inviting people to invest in companies. And we need to make sure that they can trust that they can invest in this market in a fair way. And I will say more about this. And this definitely also come back to the questions about how do we run market surveillance in a competitive world. So let me come a little bit back to this with the role of exchanges, and I need to avoid not to elaborate a lot based on the input also from David. But I would perhaps like to add just another kind of data point about what is going to happen the next number of years. I mean, think about that in the next 5 years, about 5 years from now, the increase in the middle class in China and India will be bigger than the whole population of Europe. I just want to throw that data point out as a supplement to the calculation David's team have done. Just to stress a little bit that at least Europeans, whatever we are doing, need to think about that the world are going to change. So now, on top of all of this, it's obviously that Europe is in a crisis situation still. And I think I have concluded for myself at least that Europe needs well-functioning exchange markets much more than ever. And again, a few data points. I think this is another way to say the same as David said a little bit before. But I think the European Bank Federation have made a calculation. So the reduction in the loan portfolio in the European banks will be reduced with something like at least 20,000 billion euro when the capital requirement is fully implemented. Just think about that. 20,000 billion euros. Okay? At the same time, we have what is called nicely financial consolidation. It means that European governments are cutting their spending, their public spending. Okay? So how are the economy in Europe going to grow? How are we going to increase employment? How are we going to make sure that companies are able to invest? So there is very good reasons also to look at what are the possibilities when it comes to security exchanges. And one of the fundamental reasons for having a well-functioning exchange market is that you can use that as a way to raise capital. Equity is one element, but another way is, of course, the corporate bond market. And as an old banker, I know that people on the desk of a bond desk, they hate something like automatic systems for trading. And they hate transparency, and they have historically had very good arguments for having another market structure for bonds than for equities. But my question is that also the case in the future? And are Europe prepared to pay the price for not using the corporate bond opportunities at the maximum possibility we can find in that market to finance employment, investment, and growth? So I think some of us need to come out of our historical positions, our 100% focus on the bottom line, and think a little bit out of the box. We need to do things differently in that area. And again, try a little bit to put this into perspective. When the banks are going to reduce lending as much as I mentioned, and with the capital requirement we are talking about, there's only one way for banks to react. They try to concentrate the lending to the best customers they have. And typically the best customers is also something related to large. So who are going to be hit? That will, of course, by definition, be smaller companies. And it do not help then politicians and regulators in Europe scream about that the banks need to think about the small companies. I mean, we have set up a system where we create a very, very strong incentive for the banks to make sure that the credits they are delivering is much more safe than in the past. So whatever politicians are saying, I just have to say to them, forget it. We need to think differently. And one way is to use, and I say one way because there are many ways we need to work. But the function of exchanges, the equity market, the corporate bond market is definitely ways we need to do. I think that's another way to talk about market-based finance, like David also talked about. So, there is also things around fairness, transparency, the rule framework, the markets I would like to talk about, and I will come back to that in a short while. And also the customer service part, I think is very much and very important. Robert kindly mentioned that I'm also running a clearinghouse. That's right. That's a good example of that. It's not always, at least it can sometimes be challenging when regulators decide and legislators what is the right solution. So in our case, we have organized our clearinghouse differently because we has established the clearinghouse as a for-profit listed company. So when you do that, you typically think differently. But now Europe are going to have a unified model for clearinghouses, so we need to adjust. We will do that, and we of course use that also to increase our product portfolio. We're trying to solve some of the problems we see with clearinghouses. Segregation. How can we avoid a situation like with MF Global and Lehman, where we obviously have seen that it's fine that nobody lose the money, but if it takes years to get your money back, then it's not that much worse as you should believe. But there are ways to do that, and I think we try to use this opportunity to create new solutions. But let me come a little bit back to this crucial question about, how do you create well-functioning markets? And I like to have this approach, a more principle-based approach, than going into all the technical details in the MiFID II regulation and so on. And I just would like to spend, I think, most time on transparency. I think transparency are the key question when we are talking about markets. Because it is quite simple, because the more transparent market we have, the better price formation. And the better price formation, the more happy all the customers in such a market will be. The issuers, listed companies, or the issuers of corporate bonds, the investors, and also the one who trade. Because the more transparent, the more trust there are in the market, the more people would like to use the market. And I think it is important that we try to have this in mind, because this should be our guiding star in how we look upon this. And that is why we, for example, see long discussions in MiFID II about should we have a new category. And somebody claimed that they need a new category because of their business models. And it could be. It could be. But why not try to start with a principal point? And yes, I admit that there are, for example, block trades of such a size that is relevant to execute those blocks outside a full transparent market. But it is not the same that just because at least there has not been an enforcement in MiFID II of the definition, David, of OTC. So a lot of business models have developed definitely and clearly against the intention in MiFID I, to such an extent that somebody talks about that to protect the business model, they need to be able one way or another to do the same. So we need to accept that and have a new category. I think we should think about that. We should think about whether we really believe in that or whether we should find other solutions. I am not sure that the purpose or what we need in Europe the next many years, more well-functioning markets, are, in reality will benefit from a new category where there are limits on how it works and who can participate and how things are executed. So I would definitely be much more in favor, and I think many of my customers in this city also know that. I'm much more in favor of a clear definition of what do we mean when we talk about some trades need to be executed outside the regulation. I think that is the proper way, instead of mixing up the regulation by putting something in which is not regulated as the rest of the market. So I like to have this more principal point on this one. Fairness is of course also a very important element in this. I think I have already said it, and I'll come a little bit back to the problems we have in the market in this area. Let me also say a little bit about market structure. It's obviously that it is the obligation of a market operator to try to make sure that we have the balanced market structure. And that is, of course, a challenge when you have a disruption in how things goes. I mean, last week, one of the exchanges I'm chairman for, NASDAQ OMX Stockholm, celebrated 150 years birthday. And I mean, most of these years, things have developed more or less as the year before. But if we look at the last 10 years, technology have dramatically changed the possibilities in the equity and security markets. And of course, we all need to think about how do we make sure that we, on one side, allowed the new development, new technology, new ideas, new business models to influence how it works. But on the other hand, we also need to safeguard that we have orderly markets. And then we are, of course, coming back to things like HFT, tick sizes, colo. So even that exchanges and platforms try to agree on tick size, it is not necessary everybody in Europe following these guidelines. So we probably need to go for regulation, which I think is a shame. But we risk otherwise to have some kind of a tick size war, which will end up drying up liquidity in the transparent markets. So I think it's important that we find a solution on this. Of course, we also need to make sure that HFT is, which I think is not a good word, because the reality from an exchange point of view is that it's algorithmic trading. And if I look at it, I can see the same behavior from a traditional bank as I can see from an HFT customer. So I'm not that fond of using that word. I know that journalists and others like that, but in reality, it is the algorithmic part of it which we need to look at and monitor, which I think exchanges do. And often markets are faster than regulators, which they also should be. And I mean, it's nearly 2 years ago, we in our exchanges implemented a ceiling on how many orders per trade can you have without paying an extra fee. And surprise, surprise, a month after you have implemented, everybody adjusts. So things works. Of course, to have a state-of-the-art trading platform is a key. That's not a problem for me because we have an excellent technology department. So I believe I have that service every day. So let me go a little bit on to the last section of my speech. And let me start with the surveillance. And that's I think is the second element, David, which is not necessary or working in the way you probably thought about when MiFID I was created, because and David is not surprised because I have said this several times before. I definitely don't like the fact that there is not a structure, there's no responsibility for monitoring the surveillance between different platforms. So, I mean, many of the large cap stocks are traded on 5-10 platforms. And of course, somebody needs to monitor what's happening in between the platforms and not just what's happening on each of the platforms. And I've been so many years in this financial sector that I know that if there is a free lunch out there, somebody will take it. And I believe there are free lunches out there, and that's why I have been talking about this for some years. And it seems like not only in MiFID II connection, but also in relation to another directive, MAT, which have to do with market abuse, regulators and politicians have started to think about this. And in this area, some are saying, okay, man, couldn't we just do it as in the US? We can have a centralized solution for that. And that's easy in a country where you have one language. In a European context where we have 30 markets, if I include the one which is connected, non-European members, I think we have not as many, but close to as many languages. So language is definitely a problem here. And that is why, at least for the time being, the next 5 years, I'm convinced, based on my experience, that the best solution will be that the responsibility for market surveillance, generally on a paper, on a listed share, is with the exchange where the primary listing is. That's the only way to make sure that that you also get and can use the information you get as surveillance responsible for the listing with the information and the knowledge you have about the trading part, because you need to connect it. And I talk about it because I have been running a small exchange since 1998 through all these mergers. I've been sitting at the desk. I have seen these occasions. And I know that no way somebody, for example, outside Denmark, will be able to catch as fast as a surveillance function in Copenhagen what is happening. So that's why I'm quite convinced about the need for things to be changed in this area. And of course, we need to understand that technology also means that there's much more trading between different kinds of instruments. And again, technology also can help exchanges to handle that. I mean, our advanced surveillance system, SMART, definitely give us opportunities to make this cross-surveillance. But again, we need to see the whole market to be able to do this in a proper way. The OTC parts, I mean, definitely we also need to do something in that area. And I said the solution is definitely that the primary listing exchange should take the responsibility, the overall responsibility. And of course we need a lot of coordination with ESMA to get this to fly. But I think it can be done. But I also believe it's very important. Otherwise, I think we risk bigger scandals than the ones we have seen. So let me try to summarize a little bit my messages of today. So the first is clearly that we need to make sure that regulation and regulators create a level playing field between different trading venues. I have not touched a lot about that. I dropped a little bit on that based on time. But there are problems today. Unfortunately, it is not easy to do, as David said, that if something are out of balance, we need to react fast. But it is difficult, partly because the way the MiFID II was created. Now I think with MiFID II there are opportunities to improve this, to come also to the intention David mentioned before. Secondly, it's clear for me, more transparent markets will deliver better investor protection, it will deliver better markets. That is the way to go, and we need to have that in mind when we talk about all the details in regulation. And finally, Europe needs to deliver on the G20 commitment. Again, it means that it's not enough to make sure that we are clearing OTC products. We should also, in areas where it's relevant, but there are many of these products where it is relevant, that we create a trading execution. And there is a clear reason for that, because we know that transparent trading are driving down costs all the way in the system. And again, Europe needs that financial markets, the financial support, the lending are being improved one way or another. And I'm quite convinced that more transparent trading of some of the major OTC products will also benefit the possibilities for Europe to grow going forward. So with these three conclusions, I think you will understand that I'm very much a proponent of fair and transparent markets for all market participants. Thank you very much for listening.